Hello. Okay, let's continue our discussion or basically lecture on the repossession in the book of hirer. So just now we have already discussed, basically I have already presented on the option available to the hirer in the case of repossession. So the first one, if the hirer decided to renew the contract, and the second one we have looked at what if the hirer settled the contract before its maturity date. Now the third one is the option that is available is the hirer will let the owner repossess the goods. Okay, so yeah, the hirer will let the owner come and get and take the goods back to his place. So how we should account in this if this is the case? So if the owner repossess the goods or basically take back its goods, so hirer basically gonna compare, okay, what is the goods value, okay, the goods best price or the price to be paid by new hirer, okay, minus any repossession cost, storage cost or selling cost, plus the total amount that has been paid so far. So basically this refers to the amount of deposit and installment that has been paid starting from the beginning of hire purchase until the repossession date. So how much they have made, so the payment. Okay, so we're going to compare this amount to the amount that is payable. Now, how we determine the amount that is payable is basically the hire purchase price, okay, which is the cash price plus total installment. So assuming all this total installment minus the statutory rebate. Okay. Why do we deduct statutory rebate? Because basically hirer is only entitled to pay all the hire purchase price, meaning the cash price plus the interest, but only up to the repossession date. Interest after repossession date, hirer is not entitled to pay. So that's why we make a rebate here. We allocate a rebate. We're going to deduct the amount. Okay. So basically we're going to compare this amount. If you find that the hirer's pay and let go the value is more than what he owed the owner, then meaning hirer can claim the excess. Okay, can claim the excess, meaning the owner has to pay back the difference. Yeah. But if the goods value plus all the amount paid is less than the amount that the hirer owe the owner, then hirer need to pay for the excess. Okay, need to pay because basically just compare, okay, how much is the total amount that the hirer gonna let go to owner and compare with the amount that the hirer owner owe, okay, that still in debt with the owner. So if it's not enough, of course hirer have to add some amount. Alright, now let's look at the illustration 4. Okay, so assuming we're going to use the same information as illustration 3 just now in for Shelley's Berhad, okay, where the company basically purchased a drilling machine for the price of 70,000 but pay deposit of 20,000 and installment of 4,375. So assuming the same information, and then and assuming the same situation when it comes to Shelley failed to pay the last 2 installments, July and August. Only that in this situation, in this illustration, we're going to assume that, it's not assume, what happened is, the machinery was taken back by the owner on 1st October. So if in illustration 3 just now, basically, the hirer choose to settle the contract, isn't it? But in this situation, the hirer decided to let the owner take back or repossess the machinery or the goods. Okay, so they give you what are the additional costs incurred to storage, reselling and repossession costs, And they also give you the price of the machinery at the repossession date of 30,000. So this is actually the fair value or the price of the goods that is repossessed. Okay, so we're gonna determine the amount to be paid or received. Okay, because we don't know yet whether the hirer need to pay for the assets or hirer will receive the assets. Depends on the situation, depends on the comparison between the price here plus minus all the storage costs, reselling costs here, minus the amount that has been paid so far. Okay, then we're gonna compare with the amount payable. That will determine whether you have to pay or receive the differences. And then we're gonna prepare the journal entry. Alright, so let's look at the solution. So let's calculate how much is the goods value and total amount paid so far. So given that the price on repossession date is 30,000, okay, make sure this is the price on repossession date. Okay, don't take the cash price or higher purchase price. No, that's not the thing. Okay, then you're going to deduct any repossession costs. Okay, then you're going to add, okay, all amount that has been paid so far. So basically up to this date, up to the repossession date, the hirer has paid deposit of 20,000 and made an installment of 4,375 for the last 6 months, okay, from January until June. Okay, they have made this payment. So altogether, the amount that has been settled or that will be let go to the hirer, to the owner, is 75,200. Okay. Next, we calculate how much is actually the amount that is owed or need to be paid, okay, actually in total to the owner. So we determine that by calculating the total installment. Okay, this is the higher purchase price, isn't it? Higher purchase price is the deposit plus the total installment for 12 months. Okay, but supposedly this is the amount that needs to be paid altogether. But don't forget to deduct the statutory rebate for the interest that will not happen or will not incurred on hirer after repossession date. So this represents the interest for the last 3 months of October, November and December. So how we determine this amount? Basically looking at the situation where the company use sum of years digit. So 3 plus 2 plus 1. Okay, you can go by 3 plus 2 plus 1, or you can go this sum formula. Okay, divide by total sum of year digit times the total interest allocated, which is the difference between higher purchase price and cash price of 2,500. So you got 192 there, so it will be deducted. Then the total amount to be paid altogether in this higher purchase up to the repossession date is the 72,308. Okay. So next we're going to compare, okay, between the repossessed goods value plus total amount paid with the amount payable, 75,200 minus 72,308, so the difference is 2,892. So this is the difference. Now you have to decide whether this amount, will it be paid by hirer to owner, or it will be paid by owner to hirer. Okay, so in this case, if the repossessed value plus total paid is higher or more than the amount that he owe, okay, the amount payable, it means that the hirer have paid more than what he owes, so the difference here will be paid by the owner. So owner will pay these differences to hirer. Okay, alright, now we look at the journal entry. So the journal entry, before we record on the basically what we need to do for the journal entry is on the repossession date we're gonna recognize the repossession. Okay, any loss or gain on repossession. Alright, so first make sure all interest that is still owed has been charged to, and all depreciation expense that has been incurred must be charged, must be recorded. So like this one, we assume that the company has recorded for the interest from January until June. Okay, we have recorded that, but for July, August, September, the company has not yet recorded it because there's no installment payment, so not record on interest expense. So now we make sure we record the interest expense charge on July, August, September. So even though we do not make this installment on this in this month, but the interest charge and the amount due is still need to be recognized. Okay, so we recognize for the interest for July. Okay, the digit is 6, August, July, August, and September. Okay, 4, 6, 5, 4, divide, sum them up, then divide by total sum times interest, so 481. So you will charge interest expense 481 ringgit and credit the deferred interest of 481 ringgit. Then make sure also you have calculate all the depreciation charge and the accumulated depreciation starting from the beginning of the hire purchase term until the repossession date. Okay, repossession date is on October, so we're going to calculate the depreciation charge up to September. So it's basically the cash price, the asset, okay, the cost of the asset, divide by 10 years or you times 10%, it will give the same answer. Okay, useful life of it, and make sure you portion it for 9 months only because this is from January until September, so 9 months out of 12 months. Okay, so the depreciation is 5,250, right? So you know that up to now the accumulated depreciation is 5,250. Now the other journal entry that you have to make is basically you're gonna close all the asset account and you're gonna close all the liability account. Then you're gonna check what is the loss or gain on repossession. So the first one, let's close the account, the asset account. So you have your machinery account, isn't it? Earlier you record at 70,000. So now you want to close, you credit this account. So credit machinery is 70,000 and debit accumulated depreciation associated to the asset, which is 5,250. So this basically will give you the carrying amount, isn't it? 70,000 minus 5,250. So basically how much is that? 70,000 minus 5,250. So you will have a carrying amount. Okay, the difference between this and this will give the carrying amount, okay, of 64,700 and cannot see it. 64,750. Okay, so this is the carrying amount of your asset up to the repossession date. Then you're going to close the hire purchase creditor, your liability account. So hire purchase creditor, this basically represent the amount of your hire purchase price minus all the amount that has been paid so far. Okay, so here it's the working, the hire purchase price 70,500 minus the deposit of 20,000 that has been paid and the installment that you have paid up to June, January until June for 6 months. So you're going to close this account for 26,250 and you're going to also close the deferred interest expense account Okay, this actually represent the amount of the statutory rebate that not yet recognized.